Go ahead and get started now. Welcome again to the webinar. We're going to have a very interesting discussion today as we hear from four leading RMS companies as they discuss current trends and issues in our industry. So as an intro, I'm just going to start with the basics here, just to kind of lay the groundwork. The big difference between purchasing most consumer products and purchasing a night in a hotel room is this concept of the reservation. The concept of the reservation is what allows hotels to understand demand in advance of the actual sale and thus vary the price for the same product over time. So the job of the revenue manager is not unlike that of a stock trader. They are trying to predict the demand trend and where the price should be. And just like stock trading, any insights or clues as to what the future will hold is critical in their ability to price the product. That's why data is so important to profitability in the hotel business. More and better data, if handled correctly, better helps predict the future and helps performance. The best revenue management systems are the best at connecting to, consuming, and processing data. So better pricing decisions can be made. So data is going to be one of the topics at the center of today's discussion. Connecting to data, the right kind of data, and frankly, how data may or may not provide clarity as we try to climb out of this COVID hole. We're also going to look at trends in the space, such as automation, new ways to sell rooms, the optimization of some kinds of ancillary guest revenue, and how RMS capabilities are just going to be evolving in the future. First, though, I want to go around the table and ask the panelists to introduce themselves, and then we'll get right into it. Klaus, can we start with you?
Sure. Hi, everyone. I'm Klaus Kohlmeier. I'm the Chief Evangelist for Ideas Revenue Solutions.
Thank you, Klaus. Cheryl, how about an introduction?
Hi, everyone. Cheryl Chavez, and I'm Chief Product Officer at Duetto.
Excellent. Jens? Oh, I think your sound is off, Jens. There you go.
Apologies, rookie mistake. My name is Jens Monk, CEO of Pace Revenue.
Thank you. And Michael McCartan.
Yes, hi everyone. I'm Michael McCartan. I'm the Chief Growth Officer at Atomize.
Excellent. I just want to remind the audience that there is a chat section and a Q&A section in Zoom, and we encourage questions from the audience, and we'll try to get as many as we can. If you can drop them into the Q&A, that's going to be the most efficient, but we will keep our eye on both just to make sure we can try to address any questions that you have. So, so let's get into it. First, I'm going to start with Klaus, again, in the kind of the name of sort of creating a baseline here. You know, revenue management originated in the 1970s from airlines, and it's been around in hospitality since the early 1990s, I think, just about then. And RMS is generally seen as a revenue enhancer. What have made revenue systems a must-have for hotels over the years? And you know, like what are some of the features that have become critical?
Yeah, thanks, Paul, and thanks, everyone. And thanks, Jos, for inviting me and everyone else, all my friends here on the panel. I'm really looking forward to this, and I'm doing my part to contribute to the travel restart. That's why I have a little bit of a different background than an office. So yeah, 30 years of revenue management, or more than 30 years of revenue management. And I think we're really entering the golden age of revenue management, and what we have seen over the last few months has obviously been very devastating for the industry and the world as a whole. But it's giving me also a lot of confidence that the power of revenue management and the value of revenue management is really understood by the industry now. Whereas in previous downturns, we have seen a turning away from revenue management systems. In the last 12 months, we have actually seen a turning towards revenue management systems, automation, artificial intelligence, and all that stuff that goes with us. So the reason why revenue management is so important, I guess there's three things. One is you need automated revenue management decisions. You can't have manual rules in place. You can't run your hotel on Excel spreadsheets, especially when you're remote and your hotel is running everything from a central location. Revenue management sophistication has improved a lot. And revenue managers are relying more and more on the sophistication of the systems to run their day-to-day pricing decisions. There's been 30 years of innovation, or 30 plus years of innovations going into revenue management, and the systems get more and more powerful. And when they get more powerful, they are able to maximize revenue, inventory, and pricing all at the same time, and really drive the optimal decisions for hotels, independent of what occupancy levels hotels have. And that's one of the big changes now, that occupancy is no longer the key driver for the value of a revenue management system. Even when you're running 20 or 30% of occupancy, pricing and inventory management is still critical to getting you these extra 2, 3, 4, 5% of revenue uplifts.
Kind of going around on the table, I'd like everybody kind of weigh in on some of the things he's saying. I'm also kind of interested in the view of revenue management systems as being critical in a competitive environment, particularly when there's so much pressure in the industry right now because of COVID. Does anyone want to jump in?
I can jump in, Paul.
Sure. Good
morning. Hi, everyone. Yeah, absolutely. I think just a back of the napkin sort of illustration on how critical this automated decision making is. If you took a standard hotel with 5 rooms and you wanted to assess the price for every second of today for the next 365 days for those 5 room types, you would need to make, as a human, 157 billion pricing decisions. And we live in real time, the market operates in real time, and there's no ways that a human being can ever conceive to assess the environment, the market that they operate in to that extent. And so the obvious conclusion is that you need a machine to do that. You need AI and data science to do that. I think the big factor that has changed what has happened in the last 20 years to the current environment is that there's a much richer source of data available from a variety of sources. And obviously the technology, the data science, and the science behind analyzing that data is vastly improved from 20 years ago. So, I agree completely with Klaus. If you combine the amount of data available and the richness of that data, plus the technology available, and the unpredictability of the market, we're at a point in history that we've not seen before, and it really is an opportunity for hotels to capitalize and really change the way they operate and revenue manage their hotels.
Jens, I'm curious to hear your thoughts on this. Again, specifically, when we're talking about the consumption of data and historical data, has anything changed in the last 12 months in terms of what are the core fundamental pieces of the RMS or of the RMS system?
In the last 12 months, has anything changed? Well, I think what's been happening in this industry, as with so many other industries, is a divergence between temporary trends, so stuff that happens over a definitive time period and then goes away, and more interestingly, an acceleration of existing trends. And the stuff that's been temporary will go away at some point over the next 12, 24 months, but the acceleration will persist. And I think what we're seeing there in terms of acceleration is an acceleration of precisely the points that Klaus and Michael have made. We have a more complex than ever landscape of revenue management. We have fewer resources, and we have basically a gap between those two. So resources are being taken away from revenue management teams across the world right now, because the request from up high is that operations become more lean. But at the same time, we have a situation where competition data is less relevant, because there are less systematic trends in there. Everybody's responding in tactical ways and not very rational ways always, and you have less historical data to deal with. So I think the one thing that kind of remains, that connects both of those, is that you need tech more than ever, you need help more than ever, and strong partners, and you also need to be more focused on advanced data. And that's kind of very clear, is that there is that difference in hospitality, which is very confusing to other industries. We have historical data and we have advanced data, and any booking that's happened becomes part of the historical data set, but it's actually for the future. So being able to separate those two and balance them appropriately is super important.
Cheryl, like from a features and function standpoint, I mean, are the RMSs adapting to this kind of like anomalous year that we're having? You know, how is, you know, how are things evolving from a software standpoint?
Yeah, thank you for the question. So a couple of points, and I will reiterate what folks have already said, but I think one of the biggest changes that we've seen is the need for automation. What we've seen is that a lot of our customers are now needing to do more with less, and their ability to react to things that are happening in real time really requires automation to be front and center as part of their revenue strategy as well. And then the data piece has also been something that's evolved. Like what we see with our customers is mainly that the need to rely on the historical data, you know, isn't really helping them out right now, right? Because the historical data really doesn't represent what's happening today. So the need to look at shorter timeframes and shorter windows of data, as well as looking at forward-looking data that can help give them a sense of what could be happening out there as people are coming back into travel.
Yeah, yeah. You know, I noticed that. Well, when we had the recession, there was sort of we had a recovery from the recession, and it wasn't anything like what we're experiencing now. But in the recovery from the recession, there seemed to be a lot of focus on occupancy, and rates sort of suffered. You know, Cheryl, do you think that we're heading for that same trend? And how does like having an RMS help and support making sure that there's the balance that you want?
So I think that there's a trend towards looking more to profitability over just your occupancy levels. And the RMS systems can help customers do this by giving them the right set of metrics so that they can understand what's profit, what profit looks like, rather than just focusing on, you know, the highest occupancy level that you could possibly get. Because if you're not considering your operational costs and your distribution costs, then you might not really be looking at the full picture of pricing your rooms, and then, you know, what level of occupancy that you're going to actually strive for.
Yeah, Klaus, I mean, you had mentioned something about you know, changing focus on data in metrics. She mentioned profitability. You know, is there a trend towards, I know there's always a trend towards RevPAR, but is there a trend towards GoPAR? Like, what are you seeing? What are your thoughts here in terms of RMS and focusing on the right numbers?
Yeah, a couple points have been made that are quite interesting, right? You've just mentioned economic recession, and I want to stress the number one difference here. This is not an economic recession we're in. This is a government imposed restrictions of travel. Has nothing to do with economic recessions. And what that means is, as soon as the government's unconstrained demand that is out there, and the demand that is out there, you know, it manifests itself twofold. One's two numbers here. In the US, the accumulated savings are $1.6 trillion in the last 12 months. So people have saved $1.6 trillion in their savings account, which are going to be spent on some form of experiences once demand gets unleashed. In the UK, the number is $250 billion, which is 10% of GDP that people have saved over the last 12 months. So you don't have an economic recession. Of course, it's been very, very difficult for the millions of people, especially in hospitality, that have lost their job. But this is not economic, this is government imposed. So we'll see a huge rebound and a very dramatic shift in the next few months as governments loosen the restrictions in travel, and we've seen that again. So what's really critical is for an automated revenue management system or a hotel to understand when is the demand coming back and what has changed. And one key shift that has happened is the shift from business travel to leisure travel. So for example, business travel has evaporated, let's call it that way, for the moment until probably Q4, and has been partly replaced with transient travel. So what does that mean to day of week patterns? What does that mean to booking pace? I'm here on vacation this week, and I've made my booking maybe 7 to 10 days before I actually hopped on the plane. So there has been huge amount of shifts in the segmentation, in the way of people travel and make booking decisions. And it's critical that a system understands that, and the system automatically adjusts to the changes that have been happening. So you're talking about profitability, of course, which in my mind is probably it's important, but is it as important right now as understanding the shifts in segmentation, the shifts in booking behavior, the shifts in or the understanding where some of these micro segments that are starting to come back and going to come back very, very quickly.
No, I mean, well, I hope that based on what you're saying, it sounds like, you know, you're looking at a potential hockey stick recovery as soon as there's a...
In some markets. And we've seen that already, right? The UK, when Boris Johnson announced that 17th of May, the restrictions for travel will be lifted, EasyJet, Ryanair, lots of companies had unprecedented booking volumes on their websites. Cottage.com had 10,000 bookings within 24 hours, right? So we see the same in the US. People are starting to travel. We see the same in China and in other markets. And what we can do with our 15,000 hotels and clients around the world, we can compare patterns. And one pattern we're looking at is SARS in 2003 in Singapore, and how the hockey stick actually materialized as soon as government restrictions were lifted in Asia Pacific and in Singapore back in 2003. And we can learn from that historic data and apply some of that. Obviously, we're not going to go back to 2003 and apply it, but apply some of those learnings to the future that's going to materialize over the next few months.
Just a quick question there, Klaus, on the patterns that you see. Do you or do revenue management systems also, because you have a lot of customers and all of you have customers across the globe in different variations of where the market is today, do you use some of these trends that you see elsewhere? Let's say, for example, in Florida, business is fairly normal compared to the rest of the US. Do you use that in price recommendations or thoughts or forecast recommendations in other areas of the country or world? Does that make sense to do that?
Just a quick answer here, and I'll let others talk too. But tomorrow we're going to deploy an update we frequently do across all of our systems where it makes all of our installs where it makes sense. For example, we have observed some changes in pattern in terms of booking pace, in terms of these micro trends that I've been talking about. We've been observing some hotels that are coming back very, very quickly, for example, like in Florida and some of the resorts destinations. We're recalibrating booking patterns. We're incorporating some of the demand shifts that we've observed in 2019, and also some of the demand shifts we've observed in the last few months. And we're deploying them across the install base where it makes sense. So some of the hotels will get an update, some of the hotels won't get an update. But we do those every 2 or 3 weeks as we see demand materializing differently in China versus Australia versus New Zealand versus Europe versus the US.
Do we feel?
I can jump in on the micro targeting piece, which I think is super important, because we're talking about these big trends, and we're talking about when did demand go away, when will demand return. But in actual fact, if you look at it on a micro level, micro targeting or granular level, the kind of ups and downs of demand have been happening throughout the period. And just as Klaus said, we've had some customers which were selling out for the summer in England already in Jan, Feb. Other markets trends have been different, but similar to the extent that weekends have been completely sold out. So I think one of the key things we're looking at here is, and you started, Paul, by comparing this to Wall Street, which I think is an apt metaphor, right? We're trading. And what do professional traders do when there's chaos in the market? They love it, because there's more stochasticity, there's more imbalance, there's more dynamism. And that means that those who really understand what they're doing can profit. But you have to be at that granular level, you have to be micro-targeting. And I think that's super important, and that connects in with the fact that, so I said earlier, we have a more complex environment. You have to be looking at those pockets of demand, and you have to be looking at the individual product level, because you may have one product that's doing incredibly well over a weekend and the other products are doing terribly. You may even have, which many of our customers have accelerated this, having multiple products on top of the same inventory, right? So you have, everybody is a hybrid now, I like to say, because it's accelerated the model where you have to take some of your estate and do short-term lets. So every single hotel, more or less, like it or not, have been hybrid model of some sort over the last 12 months. And that adds another level of complexity, right? Because now you have competing products for the same underlying inventory. So I think that it just kind of emphasizes this need for a deeper understanding of what are your metrics. You mentioned GoPar there. We actually have some customers who are on GoPam. This wouldn't be understandable in the US, but you know, meters squared, square meters, or Go, whatever how I say, gross operating profit per square foot.
It's a very kind of real estate friendly kind of approach.
Well, we have to do that because just in the same way that you have to balance occupancy and ADR, if you have multiple products on top of the same physical inventory and you have different profit levels and different margins, you have to have a way of deciding what am I displacing? What should I be focusing on that granular level? So going deeper has been an incredibly important part of the success for those that have done well out of this crisis.
You know, what's interesting is, you know, we talk about, oh, Florida's opening up, so they're going to have greater demand. But I wonder, you know, when you look at particularly a lot of these leisure locations, a lot of leisure locations are really tied to specific feeder markets. And I'm wondering, you know, does the level of complexity get down to the government legislation that is happening in the feeder market as much as it is as the destination market? Because I think that if people say, I'm in Wilmington, Delaware, if the state of Delaware, if you have an environment where it's very restrictive and very cautious and very concerned, people may not be even though Florida may be opened up, they may feel like, oh, this is not the right time to do this. So it's not just where the environment around the hotel is opened up. Maybe it has to be where the feeder market is opened up or not.
Absolutely. Yeah, I'll jump in there, Paul. It's what you're talking about is that future looking or future leaning data, the top of funnel lead indicators. So as the panel said, as Klaus and Jens have said, we can't throw history away. The history, there's still lots of value in the history, and you can detect patterns with the history within that historical data that can still be applied, and you need to detect that. And again, that's where machine learning and AI has a real strength over humans, is that they can find those patterns and relate those to what's happening in the market right now. But those lead indicators, before maybe you've even seen bookings come through the PMS, there are data sources that will indicate whether Delaware is booking Florida or whether it's California booking Florida, and what the profile of that audience is, what the lead time is. So there's a lot of top of funnel forward-looking data that needs to be blended. And I think what's happening now is the revenue management systems are able to balance in real time the relevance of the historical data, the current data, and the forward-leaning data, because the data is only useful if it's relevant, and being able to detect the relevancy of that data is critical to then being able to forecast that demand and understand more about that demand to price appropriately.
So sorry, just one more thing, you know, about the trading that Jens mentioned, right? It's really true. I had a conversation with the chief commercial officer of a company a couple of months back, and he said to me that this is like an environment like Wall Street, where we're trading and we're understanding behavior in a very detailed level. And he said he can understand he understands what a bar closing in New Hampshire does to his properties in Florida versus a bar closing in New York or in Delaware. So you're absolutely right that it's becoming much more complicated, because we have all these artificially imposed restrictions that are not economical. Again, they're government imposed, right? So they don't allow us to travel, although we would love to travel. But understanding what happens when restrictions get lifted, or understanding how consumers behave to those shifts, is absolutely critical.
Right. So I think that's the thing. I mean, and I have a couple of good questions here having to do with artificial intelligence and the RMS. You know, is the RMS and AI going to combine to do away with the revenue manager? I don't know if that's necessarily the case, but I think that I'm interested, Cheryl, in your thoughts on this. You know, you have artificial intelligence is great if you're taking a lot of data and you're churning it through and thinking and processing. But we're in a situation right now where there is no data in terms of when Arizona is going to open up or whatever it might be, because it's more of a government restriction, that we only have sort of an understanding of when it does open up, then what is behavior going to be like. What are your thoughts on artificial intelligence in the RMS, particularly in this environment?
Sure. First of all, I will say though, I think that at least in California where I'm based, we see markets that are, sunny, like San Diego, Palm Springs, people coming from restricted areas regardless. So even if they are not supposed to be traveling, they can get in their car and travel to certain distance, to places that are in a certain distance, and enjoy. So we've seen some of these more vacation towns actually have very, very high occupancy rates in hotels. And I'm a homeowner in one of the cities, so I see it when I'm down there. There's people everywhere. So I'm not sure people are really staying put, even if there's restrictions in their areas. But that said, on the AI question, I think that AI is our friend. It's not our foe. And I think that the revenue management world needs to embrace AI and understand that it can help them make decisions and be part of their optimal revenue strategy. Yes, do we have all the data right now? No, but I think that what AI is good at is looking for those patterns that a human being, it would take way too long for a human to actually uncover on their own. So I think that there's a lot that AI can still do for the revenue managers today, even if the data is not as consistent or it's, up and down in terms of the levels of, people traveling and occupancy. But there's so many indicators that we can look at as well out there, rather than just on the book data, airline data, car travel data, you name it, search data. It's all these different things that you can look at to inform a good decision.
Yeah, I mean, particularly the airline data right now is, because they're very focused on when things are opening up too, and so they're a good tipping point. I have another great question here in the Q&A section. It says some of the RMS presenting today do not provide a proper or complete forecast per segment. Forecast is a hot topic. It's hard to predict in normal conditions. It's harder today. The question is, how can an RMS provide proper pricing recommendations without forecast per segment? It seems to me more B2C tools rather than an RMS. So that's a little bit of a challenge to the audience, to our panelists here. Forecasting per segment. I guess the question really is any forecasting per segment even possible given the unknowns of artificial restrictions?
Can I throw in a comment actually, Paul, because this connects a tiny bit to the previous topic, if I'm allowed to just kind of make a small bridge there.
Please.
I think throwing a little bit of controversy, because we published some stuff around with the kind of broad headline, data science is not magic. And I think it's kind of important to raise the topic of the whole AI ML spectrum, because we often make too much of this. There's a little bit too much hype around AI, when in the context of what we're doing, we're really talking about forecasting. We're not talking about sentient beings. We're not talking about machines that can actually understand what's happening. Instead, what we have are a very sophisticated data science team in all of our companies who work to build models. And working to build models basically comes with filtering, deciding which data sources go in, roughly what models should be used. And if you put all of the data in there, and there's this kind of widespread idea that the more data you have, the better. But everywhere else, we're saying garbage in, garbage out. So you actually have to make a decision on a strategic data science level, what data is relevant. So
right, there's always going to be a manual weighting that goes on.
Exactly. So even if you're a Wall Street trader and you're dealing in cocoa beans or commodities or wheat, you will have to decide, is there a decent enough correlation with weather patterns? Should we be using that, or should we be looking at forecasted demand in supermarkets, etc.? So I think it's just kind of critical that we talk about the quality of data and not just the quantity, because otherwise we get into this, I have all the data in the world, I'm tracking people on the subways, I'm tracking people in airports, and it doesn't generate better conclusions. So we always go back to, what are the results? What are the results that we're generating? And just getting back to the fact that revenue management isn't an art, it's a science. And as a science, it can be demonstrated. We can take approach A and approach B and compare them. We can take two different forecasts and compare them. That's the beauty of what we're doing. We're dealing with numbers. So we can actually have an answer at the end of the day, which forecast performed better.
Right. No, that's good.
And so I think that kind of bridges into the question here of forecasting by segment. I think it's a great question, because we have to be able to go in and perform forecasts at a segment level. Otherwise, we are just a pricing tool. The beauty of what we're dealing with in hospitality is we have high levels of inventory, enough for it to be interesting from a data science perspective. We have multiple business mix, multiple parts of the business mix, multiple channels, multiple products. And we have to understand all of them to make a strategic decision around what actions to take and what decisions to take. And that is the reason why humans are in no way replaceable, because that is a strategic conversation that's years ahead of what machines are able to do. What they are able to do well is the individual forecasting. So we, for example, do forecasting by segment, forecasting by length of stay, all of the above, but it has to be interpreted by a strategic revenue manager.
Well, I mean, I think Klaus started off by saying, you know, I think that when we get going into the recovery, I think it's going to be very important to understand the behavior of different segments. We're seeing, the business versus leisure very broadly. We're seeing some differences in behavior. So I think that we all are going to have to be better forecasting per segment in order to understand what's going to be happening in the next 12 months.
Yeah, absolutely. And I mean, just take the group segment, business travel, and meeting segments, right? Which have always formed the bedrock of the hotel industry or any hotel's revenue strategy, and all of them are pretty much gone for the moment, right? Or they've been pushed back into Q3, Q4 of this year or early next year. So if you ask yourself, what does that mean to my pace, right? Which means how far ahead are people booking? And we've seen that shortening to some dramatic levels. Last summer, we had some hotels that went from 10% to 70% within 72 hours before arrival. What does that mean to my day of week pattern, right? As transient or leisure doesn't just go over the weekends anymore, but now is traveling throughout the week, because you can literally work from anywhere, like I'm doing today. And what is that? What are the group cancellations and the meeting cancellations and all these patterns by segments that we have been observing? What do they mean to my current situation? What do they mean to the future? And I think Michael or Jens mentioned about are these trends temporarily or permanent? Well, some of them will stay permanent, some of them will be temporarily, and then it's important to understand which is which. And as we're doing every 2 or 3 weeks, we go and recalibrate our algorithms and our forecast models by segment and by product to readjust the sensitivity around forecasting, price sensitivity by segment and by product, to make it as accurate and as relevant and as recent as possible. So it's not, if you're thinking about revenue management, the science a year ago and the science today, if you're looking at the drivers of forecasting and pricing and inventory management, changes are happening all the time. So if you probably compare, 12 months ago and today, you probably see a 50, 60, 70% difference in how we're deploying the algorithms and the forecasting models today versus 12 months ago, because the industry has changed. And so has the revenue management science, and hence the revenue management outputs and the decision.
So this is kind of I'm not a revenue manager, so this is maybe a silly question. We talk a lot, I have questions here about automation and manual versus automated revenue management and automation in low demand periods. Are we really, when we talk about automation, are we really talking about algorithms? Is algorithms the same thing as automation? Is there a difference between the two? Because it seems like we're talking about well, Jens is saying, well, we're going to, you have to manually tweak this algorithm. It doesn't really matter. The data, yeah, you want good data in, but it's the algorithm that counts. Is the algorithm the automation? What's the automation and what's the algorithm, or are they the same thing?
It's a bit of both. I mean, the data modeling is absolutely essential. So you need to be able to go through all of that data and look for the trends in the data in order to model. In order to predict the outcomes, you need to be able to model that data. And so you need to look at cancellations, you need to look at booking pace, you need to look at competitor information, because you need to look at the demand for different room types, for different products, because if all of those have an interdependency, if you change your standard room price, that will impact demand on your superior room type, because if you push the price up for that, that might increase demand for your, the differential between your superior room and your standard room might shrink, which would change the demand for your superior room. So all of that needs to be modeled, and that needs to be modeled in real time. If you can get the data in real time, and Jens is absolutely right, it needs to be relevant data. It's not just about quantity, it's about the quality and the relevancy of that data. But if you're getting that data in real time, you are then able to model these thousands and thousands of scenarios in real time. And by modeling those scenarios, you are then able to determine people's sensitivity to price, their willingness to pay at a certain price point. And then you can push that decision out into the market in real time. So it's a combination. The automation is everything. It's the ingestion of the data, it's the modeling of the data, it's the predictive, using the data to predict the outcomes, and then pushing the price out and expecting a certain outcome as a result of that price point, and then revalidating your assumptions that you've made around that price point. Has it,
It's really the question. I guess the answer is what I'm hearing, and maybe I'm hearing it wrong. It's not really about data, and it's not really about automation. It's about constantly making sure that your models are adjusting on a regular basis based on the demand conditions that are happening in your market. Is that?
We live our lives in real time, and back to the stock market analogy, things can happen in real time, and if you're not able to model and predict the outcomes in real time, then you're behind the curve. So the automation is all of those things, in having your finger on the pulse and adjusting in real time to those changes and responding appropriately.
Automation, often when we talk about automation, just to kind of make a conceptual clarification here, we often talk about taking actions in an automated fashion. I think we can assume that ingesting the data for a revenue management solution happens automatically. The algorithms are running automatically. So what we often mean with automation is, are the decisions taken without my manual input? And I've always said internally and to our marketing team that that's not something we should be pushing. Automation is in some ways the least interesting part of what we do. For the following reason, you can automate the simplest algorithm in the world. Actually occupancy-based pricing on a bar level is an algorithm, right? As soon as I hit 20%, I'm going to increase my bar by X. That's an algorithm. That's a very crude algorithm, and that can be automated. Right. So what really matters is not whether you have automation. What matters is what results do you achieve over a specific time period with your algorithm. And then, of course, in order for it to have optimal effect, you need to take those decisions quickly. But there's no reason why you couldn't have a very diligent human looking at all the recommendations and clicking through them.
But Jens, that's an interesting comment you're making there, because from my days as a PMS vendor, you'd have some of these conversations with revenue managers and RMS systems. And there appears to be, in some cases always, and this is probably to your point, the revenue management system makes a price recommendation, and then somebody at the hotel reviews that. But is that still the case? Shouldn't that be fully automated? And should the revenue manager not say, well, the revenue management system looks at all that data, I cannot look at all that data, so I'm going to take that recommendation automatically? Or do you feel there still has to be like a review or a filter? Or
no, I'm happy you clarified. To be clear, obviously, I believe in automation, but I think there are basically, for me, two fundamentally different ways of approaching an RMS. One is I'm spending 4 hours a day taking pricing decisions. I want that automated. That's basically a time saving. Mm-hmm. I don't care how it happens. I just want some algorithm to automate it. It can be comp set. It can be occupancy based. I don't really care too much because I think they're probably all the same. I'm
Yeah.
just going to automate it. And the other one is saying, I actually think, and that's the time saving there is half of a full-time equivalent. So take an average salary and half that. That's basically the impact on the business. Now take the other approach, which is choosing the revenue management solution and the algorithms and what actions we take in the pricing strategy is 10 to 20% of our annual room revenue.
Yep.
That's probably a much bigger number than half of a full-time equivalent. And then you're starting at a different place. You're saying, what are the results and how do we achieve those results? And I just think it's important to tease that out. Mm-hmm. And that's why we don't lead with automation. We lead with results in all of our comms.
But the results are a result of automation, I guess, to some extent.
Yeah, they are. But I think I would controversially argue here that once a day manually taking all of the decisions of a really strong algorithm will outperform a minute by minute automation of a poor algorithm. That's kind of the main point here.
Okay.
I'll have to challenge you a little bit on that, Jens.
Bring it.
Sorry. Lots of research out there about automation versus non-automation. So I don't want to. We don't want to go into details now because Cheryl has been trying to speak, and I wanted to speak.
Cheryl, you've been very polite. You're supposed to talk over these guys.
Yeah, I've been trying to jump in here, but anyway, so I just wanted to add really quickly that all the conversation about automation, our approach is really what we call controlled automation, and the main goal here is really to enable the organization to configure how much automation they want. So it could be totally manual, it could be fully automated, but it really is about them being able to manage by exception, being able to, spend more time on the strategic things. There are certain things that could be automated that they might not need to have their eyes on a daily basis. So we see it really as a balance, but it's really up to the hotel and the RM to make the decision about just how much they want. So we provide that level of flexibility for the user.
Be able to flip switches on and off, so to speak.
Yeah, essentially. Yeah.
Yeah, I do concur with Josto. Sorry, I'm just want to wrap this up, right? I do concur with Josto. I mean, systems have come a long way. Systems are able to, the most sophisticated systems are able to make lots of the decisions automatically. Our philosophy has always been from day one of our founders moving from airlines into hotels that it should be around decisions and making the decisions on behalf of the revenue management leaders, rather than just providing recommendations. So that's why I challenge Jens a little bit on that, because our foundation is built around making decisions for people, with people, and for people, and providing them with the power. And the only way you can do that, is you have the trust and the confidence that decisions are right. So Jens is absolutely right. You need to have the right algorithms and the right science to back it up, because if you don't get it right, you lose the confidence and the trust in the decisions, and then you get into the override situation and everything else. But that the decisions, automating the decisions and deploying them without a lot of human interference is kind of the holy grail of revenue management systems, I would argue.
Well, I don't want to leave people with the wrong impression, Klaus. We have 70% of our properties are on full automation, and I think we were the first to do hourly automation of all of the future room nights. And we push 100,000 prices a day. So, and that's a consequence of automation. My point was just, it really matters what you're automating, which I think is a very critical conversation to have.
Absolutely. And 98% of our users accept our pricing decisions. So, and that's across 15,000 hotels. So that's, I mean, it's a pretty high level of acceptance.
Maybe it's a little bit back to one of Jens' earlier comment about that, revenue management is a science, it's not an art. But maybe the revenue manager is sort of the artist that uses the revenue management system as a tool, because for a single person, it's just impossible to kind of go through all the scenarios to come to the right price, even if you were doing that like 4 or 5 hours a day. So it's kind of, I guess, using the revenue management decisions and thoughts and prices as a main, almost automated recommendation, and maybe slightly here and there adjust or add new, I don't know, rate plans or package plans to the environment of the hotel as a result of the data that comes across.
Yeah, Jos, I think as you and Paul, I know Klaus agrees with me because we were exchanging things on a LinkedIn chat earlier in the week. But it's if we look at GPS, the satellite navigation systems, and how we as drivers blindly trust their recommendations now. If they tell us to turn right at a certain juncture, we do, because we know that the probability of them being right, that there's a traffic jam or a congestion up ahead or a diversion up ahead, is really good, because they're taking feedback in real time from other drivers, from other sources, and we respond to that because of that trust factor. But that's automation in practice, and that's happening in real time. They're consuming large amounts of real-time relevant data and then giving us decisions that we as drivers can accept or ignore. We can continue to go ahead, but we're getting much more confident in saying, yes, I'm going to trust the system, because when we have taken our own judgment, and even if it's a route we've taken many times before, and we know that's the quicker route, when we've overridden that decision, we've ended up in a traffic jam or on a diversion, and that's where revenue management's getting. And as we're building trust, as we identifying better sources of data, and we're able to model that data better, when we put a recommendation in front of a revenue manager, the likelihood of that recommendation being right is far greater than it was several years ago, and it's going to improve and get better and better. And with that will come more and more trust, and that's where more automation. The revenue manager will say, I'm happy to run this system in full automation because it's giving me such results and has given me such good results in the past.
I think
just one more thing, Paul. Sorry, just one more thing. Just one data point. So I had a conversation 10 days ago with the chief commercial officer of a very large company, and the challenge wasn't so much about less automation and less decision making and less dynamic pricing. The challenge was making it faster and better and more real time, and getting it to a point where it's almost like continuously readjusting, which we all do already. So I think the industry is asking all of us to become more dynamic and more automated and more decision based, rather than making it less automated and less decision based.
Yeah, to that point, and I think this is just to finish that whole thought process off. So at the ROOMDEX, we're also automating the pricing for, we just focus on the small part of the whole thing, which is upgrades and upsell, and we fully automated that. So the hotel that uses it cannot change the price unless they change sort of a wide range, but you can't really change the price. So what happens sometimes in the beginning, and this is actually a question to all of you, is we look at, or the system probably looks at, what's the maximum revenue I can get out of a day, for example. So that means, do I sell something for $150, or do I sell something, that same thing for, let's say, $50? So I sell it 5 times and therefore make $250. And and I'm sure you guys have the same question, same thought. We've seen initial comments that says, well, why are we selling it at that price? I can sell it for a much better price. But then the argument would be, you could, but only once, and that the whole would be less. How do you guys deal with that in revenue management? Because I'm assuming, a revenue manager as a whole might be looking more at specific pricing, whereas the revenue management science that you guys do looks at, how can I increase the overall, revenue or RevPAR, basically. Any comments from anybody?
I can make one comment.
In that case, we optimize based on revenue. So it's the total revenue opportunity. It's not the it's not about the number of rooms you sell. It's about the overall revenue opportunity. Now, in some cases, there might be more of an occupancy strategy because of the ancillary spend, and I know we haven't got time to touch on that. But that opens up an interesting question as well. If the hotel has lots of ancillary revenue streams on property and things like that, maybe they would pursue more of an occupancy-based strategy, because they know once the guest is on site that they're going to spend more revenue than just the room. But in general, we optimize for revenue, and that may even be sort of increasing the price, selling fewer units, but ultimately generating more room revenue for the hotel.
Jens, did you want
to add to what Michael just said, and going back to a point I made earlier, which is it's really about the profitability. So it's not just looking at occupancy or or RevPAR, but really taking into account your costs. Also being able to look at the ancillary revenue, yield revenue there as well, but it really comes back to profitability.
Jens, did you want to jump in and say something?
Well, I think I'm just looking at here the viewer counts. We have over 100 viewers here, and I'm sure many of them are thinking we have in the room here the leading RMSs, or a selection of them. Let's not be hubristic. A selection of the leading RMSs. What's actually the difference between them? And I think that's part of the question that's being asked there is, yes, we have these black boxes and we're talking in the abstract, but how do we really compare different approaches? I think I've seen a few different questions like that being thrown around on LinkedIn. Here is somebody who thinks that they should use approach A, why should they instead use approach B or C? And I think it's a really important question, because if you're a viewer of this webinar, we have five different companies here with very different approaches, very different thoughts and data science teams. Some of us use different data sources. How do we actually know which one will generate the highest result for my specific property? And clearly, like for me, this is the holy grail of revenue management. For this industry to move forward, we have to be much better at quantifying results and talking results, benchmarking and understanding results. Because otherwise we will spend the next 10 to 20 years in conversations which are mainly theoretical. So I think this is one area where we put a lot of emphasis and investment into. How do we quantify results? How do we
STAR report for RMS systems?
Sorry?
You want a STAR report for RMS systems?
Well, we have a STAR report for it's the STR report that shows you if you're doing well or not, right? In the end.
Well, yeah,
are you RGI?
RGI is not about starting point, but it's not specific enough. What we really need to be doing is having comparable properties, or even intra-property comparisons between different approaches, and that's what hasn't been really done to date. And I think that's a shame, because if the opportunity is 10% or 20% or 15%, there will be a market difference between the results that we all generate for a specific property. It will be at least in the low single digits, which is a very meaningful difference to the businesses that we cover. So I think that this is something we all need to work together to put more emphasis on. What are the actual outcomes and what are the results that we're generating, and how can we help our customers validate them?
If I can throw out an observation, I think the reason why something like that probably has not been developed is because I think so much of the industry doesn't use an RMS at all. And, so we're not at this point where we have this market saturation of RMSs, and because there's so much greenfield out there in terms of new opportunities. Totally. There's for expanding and selling. That's why I think that there hasn't necessarily been that much of a demand for some comparable thing like that in the first place.
No, I think Paul, back to your question that you asked first, right, or previously, before Jens was talking, right? It's ultimately the revenue management system is a combination of optimizing your price, and you also made that comment too, optimizing your inventory and your availability, optimizing not just one day but the surrounding days, and understanding what the impact of the decision that you're making, either as a revenue manager or for the system to make, what that impact is going to be on the rest of your demand. So before the decision is being implemented, what is the impact of that decision, being a price change, allocation change, availability change? What is that impact of the decision on the demand to come, or on all the surrounding areas that you're looking at, that your room types, your segments, your rate plans, your availability across your different length of stay patterns, right? So that's what it really comes down to, is I'm implementing a decision that's either a pricing decision, availability control decision, or inventory control decision. What is that decision going to impact once I have it made, and what decision do I need to make afterwards? So it's not just the decision you're taking, but it's also the understanding the impact of that decision on the future demand that's coming.
Well, we have just a few minutes left before we've completed an hour. We have not gotten to all the questions at all, which has been, honestly, in terms of webinars, that's great because we've had a very lively discussion, which I love. We are probably going to see if we can't, have some of you all answer some questions after this that we can distribute out to the audience, because I know we also had some audience questions that didn't get answered either. But with 3 minutes left, I just want to kind of go around the table and let everyone have, just a couple sentences on, what you think is the biggest takeaway that this audience should have as it relates to this topic of automation and RMS. I'm going to start with Klaus on this.
Sorry, you broke up there for a moment, Paul.
I said just 2 or 3 sentences to summarize, what the takeaway should be for this audience on automation and the future of RMS.
Yeah, I think 3 takeaways. One, because you have low occupancy doesn't mean you need a revenue management system. I would have argued that's true maybe 10 years ago when we were talking about yield management and inventory management. Today's most sophisticated systems, they optimize your price independent of your occupancy. So if you're, and we see that we've probably had our best year ever last year. So we've seen that a lot of hotels have taken the opportunity to take the crisis by the horns and make an opportunity out of it. So low occupancy doesn't mean not needing a revenue management system. 2, this is the time to prepare yourself for the upswing. You will get back to 2019. There's about 3 billion people that are going to reach middle class in the next 10 years, and they will all have a lot of money to spend on travel. So 2019, we'll look back and say, well, 2019 was just a year, a benchmark, but we'll top that benchmark in the next couple of years, and make sure you have the best technology in place with the best integrations that can help you optimize your opportunities when the demand bounces back. And I'm saying when, not if the demand bounces back.
Thank you. Cheryl, couple sentences, 2 or 3 sentences for the takeaway for this audience.
Yeah, sure. So I'll go back to the controlled automation topic that I was discussing earlier. And, I think that for the hotels, they can really embrace automation and think about it as sort of the human and the machine coming together to make the best decisions and to get the most that the tool has to offer for them. But it's really about finding that balance for the hotel. So it's really important for hotels to think about that as they recover, because they're not bringing back the same level of people either as they had prior to the pandemic. So I think that they really have to find that balance. And I think it gives them an opportunity to also think about where do they actually see their revenue management system sitting in the overall organization, and how can they more strategically use the RM system, perhaps to even break silos down between other parts of the organization that could have an impact on profitability for them, such as marketing, as an example.
Sure. Yeah. Cool. Thank you. Jens, last 2 or 3 sentences for us.
Sure. I guess I'll talk about business impact. So I think my message to everybody here is that revenue management has a huge commercial impact, huge business impact. That's why it's an exciting field, much larger than any other potential area, or at least in most contexts. They cannot be captured manually. They cannot be captured by individuals or just a strategy. You need execution tactics behind it. And there is a market difference between the results that different revenue management solutions or tech platforms generate. So my message is, one of the biggest pieces of impact, parts of impact that you can have in the organization, is to be a good and educated buyer, and to actually do the research and be data-driven and scientific about what are the differences here and what results can I expect.
Excellent. Very good advice. Michael?
Well, yeah, very quickly. I think it's fair to say that COVID has changed the landscape immeasurably, not only and the way that hotels operate, and the way that demand into those hotels has changed and will remain changed. It is really an opportunity for hotels to bring in technology to not only save the time, and as Jane said, that's not the primary reason, but they are huge time savers, but also to detect opportunities that revenue opportunities that they previously would have missed because they were doing things manually or suboptimally. So I think a combination of a completely changed marketplace and much leaner operations really means that there's a significant place for revenue management within the hotel operation.
Excellent. Thank you, Michael. Yas, we're going to end with you as usual. Yas, I apologize. We didn't get to talk about attribute-based selling, and we only touched on optimization for, or automation of pricing for upsells and late check-ins and all that other, or early check-in and later late checkout rather. So apologize for not running out of time, but I think it was a good webinar. What are your parting words for us all?
I mean, I think I will just follow what everybody else saying. I think now is a very good time to ensure you can automate, most of your pricing decisions, during the booking process and also post the booking process, basically between booking and arrival. There is a huge amount of opportunity there to automate certain things around pricing, availability, and all that kind of stuff, so that fulfillment can be guaranteed. And revenue automatically kind of increases overall. So I would basically leave it with, this is a good time to invest in revenue management, invest in automation around booking and upselling. Excellent.
Thank you. And thank everybody for joining us. I'm going to thank all the panelists. This has been a very good webinar. I want to let everyone know that as usual, this webinar has been recorded and we will upload it to the ROOMDEX website later today, and you'll receive an email with the link as well. If you have any other questions, please feel free to reach out to us at info@roomdex.io. info@roomdex.io. I think that Yas, we're gonna see if we can't collect some of these questions and maybe answer some of these things offline with our panelists, because I think we just it's kind of the tip of the iceberg in terms of a great conversation here. So thanks everybody for coming.
Thank you.
Thanks for having me.
Thank you.
Bye everyone.